Hey everybody, Dave Costello here, founder and CEO of Jetpack Workflow and host of Growing Your Firm podcast. Today we have a returning guest, Geraldine Carter. Now she's the founder of She Thinks Big Coaching, where she helps CPAs get out of the accounting rut. Her clients routinely double their margins in 6 months or less while working fewer hours. In fact, we were talking right before the record button went live, and she goes, "You know what? I just got a message from my client. They got from 650 to 1 million, and they went from working 60 hours a week to 30 hours a week, which is pretty darn cool. I don't think we'll have all the time today to talk about it, but pretty amazing success story. Geraldine holds a BS in engineering from Cornell, and she was the co-founder and CFO of a company where her cash flow forecasting models resulted in millions of dollars for climate change efforts. In her free time, she could be found mountain biking, forest trails, or running after her 2 small children. I have 1 small child. I can only imagine with 2 in her hometown of Ketchum, Idaho. Geraldine, welcome back to the podcast.
Hi, David. Thanks so much for having me back.
Yeah, absolutely. Well, I know when we were in the pre-interview, we were talking about, what's something that's going on in the accounting space that not a lot of people are talking about. And this topic of pricing came up. And more specifically, the topic of pricing advisory services came up. Now, we've done a lot of interviews on advisory services. We've also done a number of interviews on pricing, but I think this is a real sticking point for listeners and for fellow firm owners, which is great. I wanted to get into advisory. I believe in the concept of being more forward-facing and helping them with whether it's tax planning or forecasting. How do I start pricing these things? So that is the real focus for today. But before we dive into the topic, really quick, what is your coaching group? What does it look like? And then we'll dig into the advisory pricing conversation.
Sure. Yeah. So coaching looks like, it takes 4 months to turn the ship. It's not easy to turn your business on a dime, especially if you have a practice that's $1 million and 700 clients. There's a lot going on there. So I work with my clients in a one-on-one capacity for at least 4 months, and we get them focused on what they want to do with their firm. So they design something that works for them. No firm is like the other. They're all different. And we get them typically in a niche. We get them pricing their services instead of billing. So we get them off hourly billing. And we work on aggressively systematizing and delegating so that they can free up their time and pass their workload down the line so that they can pick their heads up and actually be leading their companies.
Awesome. Well, one big component is around pricing. And so, somebody's living in a world right now where they're maybe, charging by the hour, or maybe they're doing some fixed fee and some hourly. How does a firm owner start to wrap their head around this pricing for advisory? I mean, first, maybe what the heck does advisory mean in your opinion? Because everybody has a different definition. And then how do we price these services?
Yeah, so I think you touched on the core of the problem, which is that there is not broad agreement on what advisory means. And it's so different for different CPAs doing different things. So as a consequence, no wonder so many firms are still, we're still having this conversation about shifting to advisory, but the pace of the shift is quite slow. So when I let me just give some examples, because I think that better illustrates what advisory can be for CPAs. So at the simple end, I have a client, for example, who has focused on business owners with real estate investments. And they are business owners that have low six figures in revenue. So $200,000, $300,000, $400,000. And advisory for him looks like quarterly meetings with his clients. Plus he handles the bookkeeping that he outsources. He's a one-man shop. And his revenue, he started from scratch 4 or 5 months ago, went out on his own and had less than $1,000 a month in recurring revenue. Now he's got $8,000 a month in recurring revenue, and his prices are about $10,000 a year for advisory services. But it's quarterly meetings, right? It's very different than monthly meetings, very different than weekly or twice monthly meetings. So that's at one end of the spectrum. Then at the other end of the spectrum, one of my clients, who's also about 5 months in, she's focused on practice physicians whose revenue is $3, $4, $5, $6 million in that range. And her advisory services are much more like CFO level services, where she's meeting with them monthly, if not twice monthly, and doing everything soup to nuts. And you can imagine with a practice a private practice physician, oftentimes they will have real estate also as a side hustle because that's what physicians do apparently. So her services are more like meeting monthly, meeting twice monthly, and her prices are more like $75,000 to $90,000 a year for that level of service. And she has a couple of outlier clients. One of them is in exotic car leasing, one of them is in sports memorabilia, and they're like 10 to $20 million businesses, more along that scale. And her CFO service, if you will, for them is about $120,000 a year. So this is why advisory services making the transition to it is so hard for so many CPAs, is because the breadth goes from $7,500 a year on up to $120,000 a year. So there's everything in between. I've got 10 VIP clients working one-on-one, and they're all in between those two ends of the spectrum, all with individual services and prices.
So is it a matter, based off of your examples, is it a matter of like solidifying your target market and then figure out the right packaging to deliver to them, then the pricing? Is that how it,
Yes.
is that the inputs to then come out with advisory pricing?
Yeah. And I would even walk backward upstream one more step. And that is first figure out what it is that you want to design and build. Like what kind of practice do you want to have? How many clients do you want to have? Do you want to have more like 500 and still maintain a tax factory? Or do you want to just have 10? Because it's a different lifestyle, right? Do you want to have a bunch of employees, or do you want to be a solo shop with a VA or like outsource the taxes? So you got to figure out what you want. And there's no wrong answer there. But then from there, you figure out, okay, now given that, who do I want to serve? And then, figure out that target market, that ideal buyer, if you will. And then once you know your ideal buyer, then you say, okay, this ideal buyer, what problems do they have and what outcomes do they want? What is the transformation that they are seeking? Because the delta between where they are now and where they want to go is where you're going to capture the most value. So those are the starting points for, okay, now once we know those things, then we move into designing your services and then pricing them.
Yeah. Is it a matter like with your clients is like, do they look at their current client base and start asking those questions, or is that the norm, or is it they don't have any clients and they go out and start trying to figure out what this service should be and who their target market is?
So it can be either and both. So most often it starts with current client roster. Let's see who you have, who are you already working with? And I say this all the time, start with an income by customer summary report from the last 12 months, download it, sort it in reverse in descending order, throw it on a graph. It will show you right away who your best clients are. Take the top 10. And then from there go, okay, who are these business owners? What do they want? And quite often, the CPA will not know exactly what that business owner wants. Do they want to sell it in 5 years, dissolve it and let it evaporate, or pass it down to their kids? And it's not until you really understand what that business owner wants that you can even think about designing services. So that's how you get in when you have a bunch of existing clients. But if you don't have a bunch of existing clients, if you're kind of starting from scratch, then it's a little bit more challenging to figure out. Then you're more kind of like pulling from thin air, but you can still do it because there's so much demand for financial tax planning guidance advice for business owners. So even if you don't have anybody starting out, it's still not hard to get clients.
Okay, I'll challenge you a little bit on that. I'm sure there's people listening and say, no, actually for me, it's hard to get clients. So what have you seen to be constructive, like client acquisition methods, like what in your community, what's been working well?
Yeah. So it can be hard to get clients if your marketing efforts are unfocused, then it will absolutely be hard to get clients. It can be hard to get clients if you don't understand their pain points and their desired outcomes. So I would question the person who says it's hard to get clients. I would want to know why, right? Because there are countless, like just about every business owner wants to make more money and wants better financial understanding and better tax planning. So I would want to understand what's going on in the market and where in the marketing and where are the disconnects. So, but to your question, what's working for my clients? So the vast majority are pulling from within what they have, right? Because they don't need a lot of clients. When we design services and price them, the number of clients that they need to meet their income goals goes from 700 down to 20. So they don't have to do a ton of marketing. In fact, most of them don't do any because they've got what they need within their client roster. And then once they are in a narrow market, like for example, one of my clients is in farming in South Texas. She's niched into family farms with 2,500 on up to 10,000 acres. And because she has become so dialed in on what her clients need, she's built the relationships that with the bank, with the seller of agricultural products, with the seed, the fertilizer, all the rest. She goes to the John Deere shop and chats up the guy there. Everybody knows about her. And when she talks about what she's doing, the response is, oh my God, I know so many people who want what you're doing. Let me connect you to fill in the blank, right? And so she has a list of people that she needs to have meetings with because she knows there's so much demand for her work. So when you become an expert in this way in a narrow field, your phone starts to ring. And even my client who's in single business owners with real estate in Southern California, we've only been working together for 4 or 5 months, started from scratch, went out on his own in May, and he just DM'd me. My phone rings 4 to 5 times a week now. I don't even have to do marketing anymore. So when you focus on, when you know exactly what your clients want and you know how to give it to them and give them the outcomes and the results they're looking for, business growth becomes so much easier.
Yeah. And so here's a weird question for you. What is the minimum amount to charge a business and still consider it advisory? Like, is 10K a year kind of about where, like, it's there and up? Is that kind of where you want to land? If you're thinking about, if you're really doing advisory services, that's kind of like, you could start there and move up.
Start there and move up. 7,500 is pretty light. You're doing some basic tax planning, basic tax strategy, but you're probably not doing a lot of business advisory work. If you're doing business advisory work, you're going to be starting more at like 50,000, 75,000 on up.
Okay. Okay. So let's say, we could take any examples you mentioned. I know my market, I know the outcome, I know the scope of services. How do you put a number on that?
Yeah. So great question. And this gets into, is it flat rate or is it value pricing? And when I'm doing this in a one-on-one setting with a client, we've got to figure out who their buyer is, what their revenue is, and kind of rough in what we think this is going to be worth to them. I take them through an exercise that I lovingly call, if you could have your way with your client and do all the things you need to do, and have have them do all the things they need to do, but they're not doing, and it's wasting them money, what would those things be? And typically they'll list out 6 to 8 things. We'll throw some revenue ranges at each of those things, and then we'll add it up. And what I find time and again in doing this exercise is that there's 15% of revenue that can be captured. They say to me, oh, 10%, no problem. No problem. If the cookies crumble our way, maybe 20%, maybe 25 if we're really lucky, but probably not. But yeah, I bet you we could improve things by 15%. So then what's 15% on your client's current annual revenue, right? So if it's $1 million, you're looking at $150,000 of new revenue. So would that be worth, you think they'll spend $40,000 to make $150,000 new dollars? There's probably a pretty good chance. So that's just a starting point. Now, I know that as linear thinkers and numbers people, we want more exact numbers, but this is where the art of pricing comes in, and that you've got to just point your bow at the target and let your pricing arrow go and see where it hits. And what you want to do is observe when you say your price to your client. Do they push away from the desk and suck air through their teeth and cross their arms and go, ooh, that's going to be tough? Or are they like, great, when can we get started? So now you've got some data on where your prices are, right? And I help my clients at least get squared off to make sure that their shoulders are squared off to the target, so that they're not just sending their pricing arrow into the woods. But there's an element here of, we've got to test it and see what the market will bear.
Yeah. Well, I mean, and you're coming at this from a very logical position. I think you're like, even, either there's a high probability I'm going to save you or help you make an extra 200K, so the investment fee for that is 40K or like whatever, or full-time CFO is going to cost you X. I'm going to charge 75K, right? Or
Mhm.
even better, I'm going to charge you 5K a month or 5,500 a month or 6K a month, so it doesn't feel as large. So it sounds like, you build your kind of dream package. You look at the benefit you're delivering. So in this case, 15% above your revenue bump equals X, so your price is Y. But it's all backed through logic. So I think that's probably the thing most people get nervous about, is putting out a price and then it hurting the reputation or them being embarrassed by it, right?
Mhm. So what happens when we do this the first time invariably is that the CPA is so blown away by these numbers, because what their mind immediately does is go, wait a minute, I'm meeting with them once a month and I'm going to charge $30,000 a year. And they immediately calculate the effective hourly rate. And they're like, no way. There's no way my client's going to go for that. But like you say, when we come at it from what's the value, and the CPA is selling at a fraction of the value, then it's a much easier yes. So, and the CPA tend to be uncertain that they can actually deliver on those numbers. So what I have them do is say, okay, fine. Like, what's a price that you can get out of your mouth without breaking into a cold sweat?
Yeah.
So I'll sort of negotiate with them on that number. I have a sense that they're probably underpricing what the client will say yes to, but we've got to get started. So we go low and I say to your prospect when you're talking to them or your existing client, look, I'm willing to test this out with you at this price for the rest of the year or for the next 6 months, at which point we can reevaluate and we can see if it's working for you, if it's working for me, and then we'll just make adjustments. But how about we just try it and get started and see what happens? And that enables the CPA to be like, okay, like now I'm not on the hook if I totally lowball and underprice myself, nor am I on the hook embarrassed if I like way overshoot and the client thinks the value isn't a price match. We both, 6 months from now have a chance to renegotiate this. So it makes that conversation that much easier. But I can tell you that 9 times out of 10, with the prices that we offer, the client says yes. So the concern, I think, is outsized.
Yeah. And these are clients in your coaching community. Are they literally going from business owners that were paying $1,000 a year to $10,000 a year? Or is that the type of hike you're seeing? I mean, it's with the value added services, but is that the jump you're seeing in the client base?
Yeah, in many cases, yes. So the example that I cited at the start for the client who is exotic cars, for example, exotic car leasing business, that client was paying something like $10,000-$20,000 a year and is now paying $120,000 a year. So yes, it isn't, it's kind of a crazy price hike when you think about it, but it's also a pretty intense value hike, because
Yeah.
this business owner is now able to take financial statements to the bank, qualify for a loan that's going to enable him to buy a bunch more exotic cars that he can then lease out, and the numbers pan out for him, right? So it makes sense. Before, he didn't have any clarity. There was no way he was going to be able to get his bank loan approved, but now he can. So it's worth it to him. So yes, we are seeing significant price hikes, but the value hike, if you will, is commensurate with the price hike.
Yeah. And I didn't even tell you this pre-recording, but this is my mini example of this. Is we were just looking for an outsourced HR provider, somebody that could really partner with us, kind of, we're probably not at a scale. We need a full-time HR person. Well, we want to work with somebody closely. We want somebody that understands our company, our culture. We got 3 hourly bids and then 1 monthly fixed fee, right? And the fixed fee was, we're not going to we can do anything. We're here for you. We're not going to do everything all at once. We'll take one project at a time, but it's unlimited. You can call us anytime. You can work with us anytime. And based on your roadmap, like, this is the fixed fee for the project. And we're like, yeah, we got to go fixed fee. Because the last thing I want to do is get a custom quote every 5 to 11 weeks or whatever it is to figure out what's going on. I'd rather they feel like they understand our business. We like them. They had a great, kind of referral process and due diligence process. I'd rather just have the sanity knowing this is the investment. Right. And so I think that's a big component that we underestimate from the business owner's perspective that, 70K a year. In their brain, they're probably like, yeah, but this is our person. This is our girl. This is our guy. This is who we're going to be working with. It's more that they're not calculating the hourly fee like you are.
Yeah. And you're talking about reduced friction for yourself, right? You don't have to make a buying decision every time. You don't have to run it by your budget. You don't every single time. You don't have to wonder every time what it's going to cost. It's monthly recurring, it sounds like. You know how this is going to run. And that's a huge mental load to take off your plate. And for CPAs who have clients who own businesses, those business owners are in the exact same place. They don't want to make a buying decision every 5 weeks. And they definitely don't want to get an invoice and be like, why is it this much this month? And then waste their time asking you. And you also on the receiving end hate having to justify your invoices. So when you smoothen that whole thing out and say, this is a long-term relationship, we are on the same side. And this is the great thing about setting your prices up front, is that it changes the nature, the dynamic of the relationship, because now you're together on the same side, trying to help your client create their desired business outcomes.
Yeah. And selfishly, the way I think of it, you have to think about the scope. I don't have to think about the scope anymore. I'm not going to be looking at your quotes and being like, not this much, not this much, and changing this around. I'm paying you a flat fee. You tell me the scope, like if you deliver the scope. If we go out of that, you get to tell me. But I'm not going to be monitoring the scope. That's on your end. And you can tell me if we're over or under hours or like whatever it may be. And so that burden is off the client and into the service provider. And I trust them. I trust that they'll do that.
Yeah, it's exactly the way it should be. They're the expert. They're responsible for the scope. The buyer is not the expert. You should not burden them with wondering about scope management.
Yeah. Well, a really tactical question, and I know you have a gift for the listeners as well, so I want to get into that. But how are you seeing out in the ecosystem people collecting payments? Are you a big fan of these platforms? Are you seeing them just go through QB invoices, zero invoices? Is there something else? Is it wiring? I see all these new platforms of transferring money. What's working well on your clientele to receive and get these payments?
Yeah, that's a great question. That's more detail than I get into with them. Like, are you using bill.com or ACH? Totally up to them. Probably for 10 different clients, 10 different answers.
Okay. Just as long as they're getting paid, you're happy. Doesn't matter.
Right.
Okay, cool. Well, Geraldine, this has been great. If folks want to kind of investigate the pricing journey, get more into advisory pricing, what is the best way for them to kind of learn more about your services, or even, I know you have a pricing template for them to go through. How can they get connected with that?
Yeah, sure. So let me just say that understanding how to price is the single fastest way to improve your profitability. So I encourage all your listeners to brush up on pricing. And like you, I have a podcast. I cover pricing a bunch. It's Smart Strategy for CPAs. And I also have in a 2-page PDF summarized the 4 main pricing tools that my clients are using. They're value pricing, flat rate, segmented, and curves. And if it's just like a 2-page PDF made super simple, and your listeners can get it at my website, shethinksbigcoaching.com/jetpack.
Very cool. I recommend everybody go there. Like I said, pricing, we think of growth as I need more clients, I need more clients, I need more clients. Think about your existing clients. Think about pricing. You could have a phenomenal firm on your hands if you kind of looked in that direction versus kind of maybe chasing shiny objects. So I recommend all listeners go to that URL. If you weren't able to write everything down, we're going to link everything up at jetpackworkflow.com/blog. We're going to link up to your website. We're going to link up to the pricing form. We'll do a full summary. And if you enjoyed this interview, leave a positive review. And if you really enjoyed it, share it with a fellow firm owner that needs to learn more about pricing, which, as Geraldine said, probably everybody. So you should be sharing it as well. Geraldine, welcome back to the show. Thanks again for part 2 of our interview, and take care.
Thanks so much, David. It's been a pleasure to be with you.